Okay, well, welcome everyone to our webinar, Future Finance, an introduction by the world's first digital asset bank, Signum, and Latina FinTech's view on the opportunities in LATAM. I am Isidora, and today, on behalf of the Chilean Swiss Chamber of Commerce, I will be the host of this event, which has been organized together with the Embassy and the Swiss Business Hub. Unfortunately, Matthias Imbach, co-founder and group CEO at Signum, will not be able to attend this webinar because of last-minute urgency. But of course, we want to especially thank our speakers, Martin and David, who are joining us today and who will talk about this topic of the financial field. Here with us is Martin Burger, is Chief Client Officer at Signum. And talking about himself, he has worked for Signum as Chief Risk Officer before taking up his current role for Signum clients. Prior to joining Signum, Martin worked as a qualified auditor and advisor for the financial services industry with KPMG and Deloitte. He started his career on Swiss equity sales with UBS Investment Bank. He is a Swiss certified public accountant and a Swiss licensed audit expert. Martin also holds a Master of Arts in Business Administration and a Bachelor of Arts in Banking and Finance from the University of Zurich. Our second panelist today is David Lequain, CEO and founder of Latina FinTech. He's former CIOO at MUFG Bank in Latin America, in charge of the digital transformation. He has created his own consulting company, Latina FinTech, to support the development of organizations entering the region. His background is finance and IT, being successfully investment banker for Rothschild in Brazil, responsible for the integration of a newly acquired startup in California, in charge of the financing for a large LBO, then CFO of the subsidiary of a multinational in the region. So, okay, we will start with a presentation by Martin. He will give us an introduction to digital assets by Signum, the world's first digital asset bank. And then David will continue to talk about Latin America, a tremendous opportunity for financial service, fintech and digital finance solution providers. After that, finally, Martin and David will be answering questions that we've been receiving before. So I remind you all that you can make your comments or questions through the chat available in the application, where then they will be later be answered, of course, by Martin and David. So thank you for your participation. Now, Martin, you can start your presentation. I'm gonna give you access for you to share the screen. Okay, Martin. We can't hear you. I think you're muted. Martin, we can't hear you. We can see the presentation, but we can't hear you if you.
Oh, now fine.
Yes, perfect.
I will by the organizers. Please apologize for this. Good. Welcome to this presentation. I'm very happy to be here. I hope you can see my slides. This works, right? The slides you can see?
Yes, perfect.
Good. So there will be a short presentation. I cover a few topics. So we will talk a bit about the megatrend of blockchain, then an introduction to digital assets, because we will see digital assets is actually much more than crypto. Then I will give a bit the market overview of what kind of different application and use cases we see in the crypto market and what kind of investment opportunities there are. Then a short deep dive into Ethereum, which is the second largest cryptocurrency, and then also give you an overview of who Signum is. This should take approximately 15 to 20 minutes, so I will keep it rather short. And then if you have questions, I'm also happy to take them throughout the presentation or afterwards. So I think the blockchain megatrend is actually what we observe right now. What we witness is basically that we move from an internet of information to an internet of value. And there are some fundamental differences between an internet of information and the internet of value. And in short, the internet of value offers a much wider range of use cases and value creation than the internet of information does. And I think one of the key pain points of today's internet is actually that it's very centralized, and hence you have a very few single point of failures which could actually then bring down these whole infrastructures. And then the flow of value is actually in the internet of information always through intermediaries, whereas on the internet of value we can actually do peer-to-peer transaction of values. So we can actually transfer originals rather than just copies like we do on the internet of information. Then on the economic axis, actually to really use the internet of information, you actually need to have a lot of intermediaries, for example, banks, credit cards and the likes. And many people in the world, they don't have access to these kind of intermediaries. And the internet value is accessible to everyone who has, for example, a mobile phone. And this is quite interesting because, of course, this increases the addressable market for certain use cases. Then on the impact, basically you have with the internet of information, you had the information of the information revolution, right? Everyone suddenly had access to information, and it was more difficult to have censorship in place. And now with the internet of value, we actually have economic empowerment, so that everyone can actually transfer and own the assets how he wants and when he wants. And investment opportunities, well, given that everything is working through centralized corporations and the intermediaries, the internet of information was actually, the investment opportunities were primarily in companies like Google, like an Amazon and the likes. And with the internet of value, we now actually have the possibility to invest into the technology itself. So suddenly we can actually own part of a decentralized internet, which is, I think, quite an interesting use case. Now, how is the internet of value powered? And it's basically powered by the blockchain technology. And you see here a few features of the blockchain technology. So it is immutable. This is very key, because if you transfer something of value, it's important that we actually have something which we cannot just undo. So it's immutable. It's safe and anonymous. Both of these features are important, especially also the anonymity is to a certain extent important. Otherwise, everyone will basically see what kind of financial spending every person is doing. Then it is transparent, which means we can track and trace actually all the transactions that have been performed in the past. It's decentralized and peer-to-peer. I think the decentralization of the blockchain technology is a very, very core element, and is then also less vulnerable to single point of failures, and it is forensically auditable. So these features basically enable the use cases that I outlined in this the internet of value. Now with this, a brief introduction to digital assets. And like you outlined, Signum Bank is the world's first digital asset bank. And when we talk about digital assets, we actually not just only talk about blockchain protocols like Bitcoin, Ethereum, and the likes, but we also talk about other forms of digital assets, like, for example, NFTs or stablecoin or tokenized assets or security tokens. And we actually here list a few of these different protocols. So, for example, an Uniswap or an Aave or an X Infinity. these are all applications built on top of the Internet of Value. Some of them are in decentralized finance, some of them are more in the gaming space. Then we have the non-fungible tokens. And on the non-fungible token side, for sure, the most famous one are the CryptoPunks, basically digital art. It's very interesting because actually you can really make sure that someone owns a digital original, whereas it's very easy to make digital copies. But I think this also offers, for example, artists a great opportunity to monetize their intellectual property. Then you have stable coins, USDC and USDT. Then you also have tokenized assets. One of the tokenized assets is, for example, a Picasso token, which we issued. We basically took a Picasso painting and we fractionalized this painting into different tokens. And then through this process, we could actually offer fractional ownership of a Picasso. So you are exposed to the payoff and value appreciation of Picasso, but you don't need to buy the full painting. And then we have security tokens. And security token is actually just a tokenized form of traditional securities. And these tokens you can also trade, for example, on our platform. Now, all of this is called digital assets. I think the most common use case is still cryptocurrencies, but it's important to note that there are many different use cases and other kind of assets being built up in this technology. Then a quick market overview now, really primarily focused on digital asset investment opportunities. So I think on one hand, if you look at it from a pure financial perspective, you have, of course, venture capital. Actually, there is quite a lot of venture capital still flowing into the digital asset and blockchain space. In terms of payoffs, VC investments are typically locked for quite a few years. Quite often, you also access venture capital through funds. Then we have income generation. So within the digital asset space, you can actually also generate yields by, for example, using arbitrage opportunities or by providing liquidity to certain lending pools. And then another investment opportunity is basically the alpha potential. So like in traditional finance, we now see that there is there are hedge funds basically entering this space who want to exploit alpha potential in the digital asset space. And because the space is a bit less crowded than the traditional space, these opportunities are actually quite good, and you can actually achieve quite good alpha in the digital asset space compared to the traditional space. And we also have the mega trend participation. So this is basically if you believe that the adoption of cryptocurrencies is very, very big, and you just seek exposure to these layer ones, to these infrastructure layer like a Bitcoin and Ethereum, a Solana and the likes. And I think this is another investment opportunity that exists in the digital asset. Now, with this, just one use case, and often when I actually have the opportunity to present in front of an audience, I use this example because very often I hear that there is no, what is the value creation of crypto and how is it being monetized, and is it not just speculation? And what I used to do is I compared it with something that we are all familiar with an infrastructure, with a more traditional infrastructure than the blockchain infrastructure, with a road. And basically, when you build a road per se does not generate a cash flow, right? But you can generate cash flows and you add value by actually putting traffic on this road, and actually you see that goods are being transported or people can move from A to B on this infrastructure. And I think with Ethereum, we can also see that Ethereum started with just providing an infrastructure. So basically, there was this decentralized smart contract ready platform, but basically there was not a lot of traffic on Ethereum. And this was the state of Ethereum in 2015. So the infrastructure was built, but there were actually not many use cases which were running on this infrastructure. Then what has happened in 2021? Basically, many people were using this infrastructure. So you had NFTs, you have decentralized finance, we had applications in the metaverse. And what happened is actually there was so much traffic on this road that the infrastructure was not able to cope with all the traffic. And then basically we ended up in a traffic jam. And people were actually willing to pay a very, very high fee to use the infrastructure, the so-called gas fee. And this is also one of the reasons why Ethereum increased in value to a price of $4,800 back then. Now, what has happened is basically, given that there was so much traffic, the Ethereum developers, they said we need to upgrade this simple road to a highway. And some of these upgrades have now been successfully completed in the last weeks, actually. So around 1.5 months ago, there was a fundamental upgrade of the Ethereum infrastructure, and now we have a much, or to some extent, more scalable infrastructure. And this then also will lead to even further use cases which we don't have in mind yet. But I think just the infrastructure per se offers such a wide variety of use cases that we'll see new use cases on top of NFT, decentralized finance, and metaverse emerging. And what is interesting is also that people paid only last year, they paid actually $3 billion in road tolls to use the Ethereum network. And that's quite a lot amount of money for actually to use this decentralized infrastructure. Now with this, to the last part of the presentation, an overview of Signum. So Signum is a digital asset technology group with a Swiss banking license and capital market services license in Singapore. So we are dual headquartered in Singapore and Switzerland, and we empower institutional and private qualified investors to exit the digital asset economy. So in the very beginning, we actually anticipated things that were happening now also recently with the collapse of FTX. We believe that you need to have trustworthy, reliable gateways to access this innovative technology. This is why we decided to go the hard way, obtain a banking license in Switzerland, because ultimately this banking license provides a lot of trust, and trust is what institutional clients are looking for. Now, for us also, technology was always more in the focus than the banking license, which also means that we actually have a very interdisciplinary team of IT and digital asset specialists together with a banking operation and banking sales team to actually provide this service to our customer base. Now, who do we are in terms of KPIs? So you see here, we basically, Signum Bank today is, we have a traditional banking license, so we can provide fiat payments, we can provide loans, we provide asset management services. We are a custodian for digital assets, so we offer segregated wallets for our customers. This means that the crypto custodized with us is actually off balance sheet. We offer staking for digital assets. We offer access to DeFi. We are also a broker, a crypto broker, which means we offer 24/7 spot trading, we offer options trading, we offer FX trading, and we always guarantee best execution for the trades that we execute. Today, we have a bit more than 2 billion in assets under custody at Signum Bank. We serve more than 1,250 clients globally. These are all institutionals and qualified investors, basically. And we serve clients in more than 40 countries worldwide. I think the reason why we serve clients in more than 40 countries worldwide is primarily because Switzerland has a very advanced framework when it comes to cryptocurrency and digital asset services, and this is actually something that we can export quite well across the globe. You see, we actually partnered up with some of the biggest and well-established brands in the world. So, for example, we have Tata as partner and investor. We have SBI Holdings, Swisscom, the largest technology group in Switzerland. We have SHK as one of our investors. We have Animoca as one of our investors. So we have really a very, very broad investor and partner base, and this is, I think, ultimately also one of the foundations that we built Signum. Then, just very briefly, of course, also when it comes to the management team, We have a very good diversification across banking knowledge, but also digital asset knowledge, and you see that it's quite well diversified here. We also have a diverse team with more than 200 people working for Signal now globally, and we have a management team in Switzerland, but also a management team in Singapore, providing digital asset services to the customers in the respective areas worldwide. Then on a board level, and I think here we are also proud how the composition is, depending on how familiar you are with the Swiss banking ecosystem. You for sure, for example, came across Peter Wuffli. Peter Wuffli is the former CEO of UBS, the biggest bank in Switzerland, and he supports us in the role of a board member. And for example, also on the advisory side, we have high-profile advisors from across the globe. With a Philipp Hildebrand, for example, former president of the Swiss National Bank, or an Alexander Lipton, or a Patrick McGoldrick. So we have a very well diversified and high-profile board on this side. Now with this, I would already come to the end of the presentation, and then actually we have for sure chance to have a more interactive discussion once the Q&A session starts. Thank you very much.
Are you there, Martin?
Yes.
Yes. You're still sharing.
I stopped.
Perfect. Perfect. Thank you. Thank you very much, Martin, for your presentation. I remind you all that if you have any questions, you can write it on the chat, and after David's presentation, they will be answering all the questions. So thank you, Martin. And now, well, David Lecain, CEO and founder of Latina FinTech, will start the presentation. I'm gonna give you access now. We can't hear you, David. Yes, perfect.
So thank you very much for inviting me, and very happy to be here. But the idea is to present in 15 minutes opportunities in Latin America. A quick agenda. First, a snapshot of the region, because it's a specific region. After, we'll go directly to opportunities. I will see that.
Sorry, David. Can you check your microphone? I think it's with a bit of problem. Maybe if you get closer to it.
Okay, let me. Is it better?
Yes, much better.
Oh, okay. And yeah. So after we'll go to the opportunities. That there are same opportunities as elsewhere, but very specific opportunities for LATAM. We will go to see concrete opportunities for vertical in the financial service industry. Go to fintech and spend some time on blockchain. Review the two giants of the region, and also other countries that are very innovative. So very quickly, a snapshot of the region. As you can see, we are a large region. If you draw a line between the north of Mexico to Cape Verde, 10,000 kilometers. It's a very diverse region, 33 countries, 650 million people. We have two giants, Brazil and Mexico. And what is usually unknown that in terms of GDP per cap, we are very similar to other emerging regions, especially Asia. The region is now integrating with the rest of the Pacific. There is a Pacific Alliance. We are, you know, the name VUCA, which means volatility, uncertainty, complexity, and ambiguity. We are a VUCA region. You know, some countries have high inflation. We are a very commodity-driven region, some volatile institution, but we have a booming digital economy, and this is really a new frontier. This is a region of opportunity. Still okay with the sound? You can hear me?
Yes, perfect.
Oh, okay. So very quickly, opportunities are the same as elsewhere, you know, with finance, with the disruption. So we know that the customers of finance are different expectations. We have open banking here like elsewhere, by bank as a service, lots of fintech, payment provider, new bank. Embedded finance will be very strong after, and new ecosystem, also you know, infrastructure of the financial institutions that are a bit outdated and needs to be. Now, if we go on the specificity of the region, why I think it offers much more opportunity than other regions. First, and it's well known, we have a low banking penetration, around 40%, which gives DeFi here a lot of future. Many companies, people are not with any real bank relationship. Good opportunity from the fact that the digital transformation of finance and the fintech disruption is quite new here. You know, in Europe it was in 2010. Here we start speaking about fintech 3-4 years ago. We still have a quite concentrated financial industry. This is very important. That MUFG, I installed T24 Temenos solution. Temenos is a leader of core banking from Switzerland, and the technology offering is quite limited. Very important blockchain, lack of trust in institutions, volatility, and finally, we have a really interesting increase in marketplace and perhaps so let's go to very concrete opportunities per vertical. You know, this is a CV Insight opening a vertical in finance. Let's take a few one. Lending, 55% of SME have no access to credit. Blockchain, we have the highest penetration of crypto owners globally at around 30%. RegTech, you know, legal compliance and tax is really a complicated, complex issue here in the region. Payment, Brazil was able to create Pix, which is an instant payment skill with lots of possibilities in 1 year in a continent with 250 million people, and everybody uses Pix now. Credit in Mexico is following the same path. Insurance, 27% of cars in Brazil are in uninsured, sorry, yes, actually 27 are insured, which means lots of uninsured. There is an integration of capital markets between Colombia, Mexico, Peru, and Chile. And perhaps the most important, we have the record of highest foreign remittance, 100 billion per year. It started with, you know, people from Mexico sending back money from the US, but now we have many diasporas, many people have moved from Venezuela, Colombia, and there is an enormous flow of money going through the frontier at a very high cost. Very quickly, we have big banks. You can see in total assets, they are very profitable. And you know, their system, the infrastructure were created in the 70s, you know, big integration. And now, you know, they have to change, they have to go to cloud, they have to install core banking solution. So it's also a huge opportunity for IT solution providers. Fintech. So fintech is new, but it received lots of money. I gave here some examples. So Nubank from Brazil is now the biggest neobank in the world. They raised $750 million, and after December last year, they go with their IPO in New York. They were valued at 50B. But if you take e-banks, payment in Brazil, Clip in Mexico, those are huge funding round. Very interesting, Quinto Andar and ProperTech in Brazil, and Voila, a very sophisticated neobank in Argentina. So you see, it's a very new fintech revolution, but now with lots of very interesting models growing a lot. You know that in the region, AliExpress or Amazon were not able to take the lead, and this is local providers. Mercado Libre for Argentina is present everywhere and is a leader. Rappi for Colombia the same, and they have created their their payment infrastructure, and now they are growing in financing the client, the provider. So new but really vibrant fintech ecosystem. Now, very important digital assets. So digital assets for European or for there are many use cases, but for people here, it's really important the fact that it's a shelter for value, and especially a way to escape tight capital control. Okay, so here people really invest in crypto. They invest a lot in stablecoin, and their main concern is to protect their assets. And if you take some country with 100% inflation a year or a few thousand inflation a year, the decline of Bitcoin, of Ether is nothing as the inflation and the values they use. Interestingly, also in the region, crypto are used for payments, for purchase in stores, physical or online, and also between people. And a few examples of initiatives. Bahamas, is the first country to launch its central bank digital currency. More controversial is Salvador, because Bitcoin is legal tender in the country. We have the Inter-American Development Bank, which has launched LACchain, which is a kind of accelerator for blockchain. And we have lots of foundation and blockchain providers, very, very active in the region. So let's finish with two slides. First, a snapshot of Brazil and Mexico. There are the two giants. They are extremely different. Brazil was a leader in digital finance, but it's a very closed economy and closed financial system. It's very specific. All solution needs to be tropicalized, adapt to the country. But it was really the booming place for open finance, for DeFi, for crypto. Mexico is totally different. Brazil is very inward-looking, very close. Mexico is totally different by its nature. That Mexico is part of NAFTA, so it's much more open. Very interestingly, from the 10 biggest banks in Mexico, 7 are international: BBVA, Santander, Citi, HSBC, and Scotia. And progressively, Mexico is competing with Brazil as a kind of digital finance hub for the region. And one of the reasons is for smaller country, Hispanic country, Argentina, Chile. This is a platform to grow with the big markets, the same language, and perhaps have access to the US and Canada. And it's very amazing, but Mexico has still low banking penetration and is a very cash country. Finally, what I call the three innovators: Argentina, Colombia, and Chile. Argentina is facing some difficult economic times, but it created the biggest marketplace in the region, Mercado Libre. In payment with Mercado Pago, they are extremely innovative. Voila is a very sophisticated neobank in Argentina, and they are really an IT solution provider. So Technisys was bought by an American IT provider. Globant is a kind of Accenture for the region. And crypto and digital assets are very active in Argentina due, again, to the macroeconomic problem. Chile was known as the Switzerland of Latin America. It was even called by the economists the Silicon Valley. It has a very high banking penetration and very sophisticated bank, which led to a delay in the legislation. The fintech law was voted, I think 1 or 2 months ago, but we have strong, fintech, and they will grow. And to finish, Colombia also is a very innovative country, a strong financial industry, and the champion here is Rappi and RappiPay. So that's it for me. Thank you very much.
Thank you very much, David, for your presentation. I'm gonna stop your share screen. Perfect. So, perfect, here we are. So now both Martin and David will be answering some questions. We are receiving the questions also in the chat. And okay, so the first question we received is, what is new in the world of digital assets that's the traditional financial world does not have?
Who starts?
Briefly, I can take this one. I think that one of the key aspects is really the decentralization, right? I think this is a very nice feature of the technology. I think it's also a feature that certain central governments probably don't like that much, but actually, in order to use an Ethereum, you are actually not reliant on any, for example, central bank, and you're also not necessarily relying on the monetary policy of a certain country, but you have an independent custody outside of this traditional monetary system, which is, I think, one of the key features of this technology, that it's decentralized, it's peer-to-peer, and that much on central intermediaries. And this is one of the key features, I would say.
You wanna add something, David, or we go with that question?
Yeah, actually, when you have a very low banking penetration, and it's so difficult to create an account, I mean, decentralized finance is really.
I think again we can't hear you.
Can you hear me now?
Yes.
Okay, so I was saying that to answer the question, the fact that we have such a low banking penetration, and it was so difficult to create an account, digital finance and this new kind of finance is for us a big. You can create an account with your mobile through internet, and so it's really an improvement.
Perfect. Thank you very much, both. Okay, so another question is, how do you get people to trust digital assets, and what support do you offer for this?
Well, I think especially these days, trust and digital asset is a really key term, right? I think we need to differentiate between trust in digital assets itself and trust in intermediaries providing services around digital assets. I think in digital asset itself, it's actually, I mean, the value of every currency, and also cryptocurrencies included, comes actually through people trusting that you can buy certain things with a US dollar, with a Swiss franc, with a Bitcoin or even Ethereum. So ultimately, I think this is the value represents how much trust people have in this technology. Of course, there is one additional thing that creates value and trust for Ethereum, for example, all the use cases and transactions that are being performed on the network. But when it comes to trust for intermediaries, I think on this side, I really believe that you create trust by, well, by being transparent, by, for example, publishing financial statements or the likes, which we now see, for example, from a Tether, which was basically forced to publish certain information because people didn't know whether all USDT is backed by a US dollar, or also if you meet certain regulations, right? This is, for example, this was a conscious decision of us to go for a banking license, not because banking license is cheap, but because a banking license, of course, is a signal of trust.
Trust is a very complex issue in the region. Not everywhere. Not always been trustful. We had some defaults, and you know, I understand it's next question when FTX went bankrupt days ago. But you know, as a new industry, for sure, we are facing some. But at the end of the day, people that invest in understanding the technology, I mean, it's much more trustful that, you know, that we had and problems we had in the region. So I think it will take time. I think in understanding the underlying technology and with industry gaining maturity, will be created or improved.
Perfect. Okay, so the other question is, does inflation influence the value of cryptocurrencies and digital assets? If so, how can the impact be mitigated?
My answer would be clearly yes. I think there is also empirical data showing that the adoption in high inflation countries is actually higher than in countries with lower inflation. Now the question is this necessarily something bad? Probably for the government, no. For the people, for the government, yes. For the people using cryptocurrencies to escape inflation, probably no. But clearly, I would say yes. There is the value proposition of cryptocurrencies from this independent financial system, independent of the central banks, is stronger if you are in a high inflation environment.
Yes, I totally agree. If you take the case of Argentina or Venezuela, situation. But yes, that crypto are a way to save value, to have safe assets. You know, inflation is due to the loss of trust in the paper issued by the institution. So hyperinflation or high inflation countries, you know, shown in the region, lots of investment.
Thank you, thank you, David. Sorry, we're still having a bit problems with your microphone. Maybe if you get closer to it.
Okay.
Okay, great, thank you. Okay, so another question is, what is the growth perspective of the digital asset industry in Latin America versus Europe?
I think it's, this one is for me. Or yeah. So yeah, I hope you can hear me. I will speak louder. The potential of digital assets and crypto in the region is for me much higher because of, again, low banking penetration. I think DeFi, there's a lot of interest with DeFi because it's a way to avoid to go to an institution to get financing. So I think in the region, for many people, digital assets are a necessity. I would say even a way to survive. Not everywhere. I mean, Switzerland, Chile is a very safe country, but in other places, it's really a way to manage to store value, not to lose all your savings, a way to not spend a huge amount of money by transferring money, to your family in another country. So I think it's a question sometimes of survival, of necessity, and for this reason, it's much more important than more stable region.
Thank you, David. Do you want to add something, Martin?
No, I fully trust in the expert.
Okay, perfect. Okay, so the next question we have is also in terms of fintech regulation, what is the gap you see between Switzerland and LATAM?
Do you want to start, Martin, or?
No, I think on this one, well, I'm quite familiar with the framework in Switzerland, but I'm actually not at all familiar with the regulations in Latin America.
So, remember my first slide, the region is very diverse. So you have actually two kinds of regulation. You have, laws that have been passed. The first one was Mexico. It was a cut and paste of the UK. And the last law to be passed was Chile, a few months ago. But you have also different regulation, usually created by a central bank. This is the case of Brazil. This is the case of Argentina. Both models have their, advantage and disadvantage. Let's say that when the central bank change the regulation, it can lead to a quicker fintech blockchain development because it's more flexible. In the case of Mexico or Chile, you have to pass a law. It's a complex process, and the law needs to be updated. So this is to answer on the region. But I think now we have good regulation in the region, what I understand from Switzerland, but I'm not the expert, is that Switzerland has become the kind of the center with the crypto valley of blockchain and digital assets. So I would say in terms of regulation, sorry to say that, but Switzerland is much more at the front than we are. I don't know if I was clear.
Yes, very clear. Thank you, David. Martin?
No, well, I would also, based on my knowledge, Switzerland is quite advanced, but yes, I think it's there is no right or wrong, but I think important to have a strategy from government to deal with digital assets because they are here to stay, and I think you should at least take a stance so that all the corporate and all the innovation can actually knows what is the framework set by the government.
Perfect. Thank you, Martin.
To add it up, yeah, when we see the importance of Switzerland in digital assets, I think for blockchain and digital assets, it's a kind of model for many countries in the region. But again, even in terms of property laws, tokens, our fintech regulation are not yet. You have token issued, but you don't have the same legal security as you have in places like other European countries.
Perfect. Thank you very much. Okay, we have another question related with universities. What role are universities fulfilling, or should they fulfill, to promote the study of these topics for the new generations?
Happy to say that I think universities, they really play a key role in the adoption of these new technologies. And like in Switzerland, we see now that many of the big universities, they have like some crypto or blockchain courses. I think they are also almost fully booked. And still, we as a company actually struggle to find talent with the right education provided by universities. So I think universities, they play a very fundamental role in making sure that the country is competitive in terms of innovation, and when it comes to cryptocurrencies, provides the foundation that all the public sector can also build up. You know.
And actually, yes, I totally agree. And just to, I don't know if you can see my camera, but the Crypto Valley, we are a member of the Crypto Valley, and I think this is yes, through the University of Zurich and you know, all this association that, you know, the culture of digital assets, the knowledge develop, and it's so important. So yes, I think you know, and I think we are a bit we are not so much advanced in the region. There are, you know, some centers, but I think university in the region needs to invest much more and be more important on this.
Indeed, yeah. Thank you very much. Okay. Do you think that in the future digital assets will lead the financial market and we will stop using money as we know it today?
Well, now I need to admit that I'm not one of these Bitcoin maximalists. So I believe that there is a coexistence of decentralized finance and traditional finance as we know it today for quite some time. So I would say probably the next decade, so all the 2020 to 2030, we probably see this coexistence. Then what happens after 2030? Well, who knows? But I don't see that the decentralized finance and cryptocurrencies, they overtake this traditional financial system in the near term.
I think it will take some time, but actually finance and money has always been the reflection of, you know, technological state of a civilization. I mean, you know, in prehistoric times, money was stones or was salt or was after it become, you know, gold and after cash, and we are becoming more and more digital. Through Facebook, we make friendship, we meet people. So at some day, I think, yes, digital, we perhaps not make money disappear, but you know, for the time being, I mean, half of a relationship are through digital. So I think it will become even bigger.
Thank you very much. We have still 2 more questions. This one is directly to Signum. So, Martin, what can you tell us about the Metaverse Hub that you recently opened in Signum?
Well, good to see that the audience is aware that we opened this Signum bank in the Metaverse, actually. So we decided to make a step into Decentraland, walk the talk, have an office premise basically in this Metaverse. I think for us, we really wanted to show like how innovative we are, but we also believe in the Metaverse of being actually something very substantial and establish ourselves in the Metaverse together with many other big corporates who now decided to make this step. Today, we actually have different functionalities in this Metaverse Hub. So, for example, we have an NFT gallery. We will probably at some point in the future also have like some private rooms which are only accessible if you meet certain criteria that are, for example, vetted by Signum Bank. So we have quite a number of ideas. Well, we are quite happy that we have these offices so close to Central Plaza in the central end.
Amazing. Okay. And the last question that we've received through chat is, how does a bank like Signum deal with anonymous crypto identities regarding banking regulation and requirements such as AML?
Yes, so when it comes to AML and KYC, we actually apply traditional means, which means like if you onboard, you of course need to disclose source of wealth, source of funds, and the likes. And when you send in crypto, any crypto that enters Signum Bank, we need to establish the sender of these cryptos. So we need to verify ownership of the wallet that is sending these assets, and we need to identify the person who has control over this wallet to exactly mitigate the risk of money laundering. Certain coins with too strict privacy features like Monero, Cash, or the likes, we can actually not offer as a crypto bank. So we need to have a coin which a chain which enables us to do these steps which are required by Swiss regulation.
Thank you very much to both of you.